The Bahamas Business Outlook opened today at the Wyndham Nassau Resort in Cable Beach. In officially opening the event, Minister of State for Finance Zhivargo Laing told the business community that the Bahamas economy is showing signs of positive growth. Fern Carey tells us more.
Despite the global financial crunch, the Bahamas' economy is still experiencing growth, according to Minister of State for Finance Zhivargo Laing. The junior finance minister informed the business community Thursday that last year the economy grew by 2%, and those gains are expected to be sustained over the next 3 years.
The Bahamian economy will grow by between 2.5% and 2.8% this year. This, of course, is consistent with what the IMF is also forecasting for our economy. That notwithstanding, regrettably, unemployment is likely to remain in double digits, though there is the expectation that there will be some continuing decline from the 13.8% that we recorded last year. We further expect to sustain that growth trajectory with a 2.4% in 2013 and 2.3% in 2014.
The government recognized that improved tourism numbers due to cruise and stopover accounts, better global economic prospects, and increased construction in the private sector, particularly the Bahamas project, is expected to support that growth.
Overall, they have spent on the project to date $100 million. It is expected in 2012 that they will invest some $831 million, with some $206 million in additional subcontracts to Bahamian employees. Albany expects in the first quarter of this year, for instance, to spend some $218 million annualized, and have already spent on the project some $500 million.
Laing also noted that despite high unemployment numbers and business challenges, the government uses fiscal headroom to invest in legislative and fiscal reforms and public sector infrastructure investment. It's a move that's expected to boost consumer confidence while improving employment prospects. The Minister of State for Finance also defended the national debt and said that Bahamas has a relatively low debt-to-GDP ratio compared with other Caribbean countries.
We have, at the beginning of this crisis, a debt-to-GDP ratio of the order of 37%. At the same time as we went into the crisis with that 37% debt-to-GDP ratio, Barbados went into it with a 100% debt-to-GDP ratio. I want to remind you that in order to get to 100% debt-to-GDP ratio, someone had to be lending you money when you reach 40%, 50%, 60%, 70%, 90%, 100%. And those somebodies was not the country itself. Financial institutions were doing this. Jamaica, 120%.
Meantime, Minister Laing says that Bahamas is more ready now than we've ever been to do business in the 21st century. Fern Carey, ZNS News.